right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so we're going to get started with our analysis this morning. Let me grab the bias chart really quick, and let's go ahead and get started here. All right, give me 1 second. Just getting all set up, guys. Okay, all right. Time to get this party started. All right, let's go to the euro dollar. So as far as the euro goes, I closed, I had to sit through some pain the last couple of days. Just so you guys know, I've been shorting the euro into this, I think I had my cost average was, I don't know, 114.10 or so, just kind of sitting in it, knowing that the 115 level was really, big resistance, knowing that we were at the, bottom end of the, dollar index, and just keeping all that in mind. It was a tough hold, very frustrating, especially over the last, week. Finally, we rolled over. Now, the question is how deep are we going to go here? And I think a lot of it really, really comes back to this dollar index. And if you look at the dollar index and say, are we really going to pull out of this descending wedge? Is this truly a descending wedge? Because as you can see, following that's the ECB meeting, I have to draw through that trend line. So is this even a valid trend line? And I don't know that. I'm assuming it is, but thing about technicals is you kind of got to redraw and draw, redraw and draw, and you got to kind of take it all as it goes. You got to look at correlations at the same time and make sure everything's jiving. Right now, the euro has basically held the 618, and if you ask, well, what did you cover last night? Because in Asian trade, you'll notice here in Asian trade last night, we dropped. This is a 4-hour chart. We dropped right to the 618, and you can see right here, this was happening in Asia last night. Okay, and when we got to the 618, I knew we were sitting here right at the 618. I actually had to run to the grocery store to get something, and I was sitting in the grocery store parking lot closing out half of my positions on nearly everything. And it was funny. I didn't get out of my vehicle for like 15 minutes as I was sitting there closing out stuff. And boy, isn't technology great? Because I mean, to have the ability to do that is great. I mean, because I didn't, and you didn't, a few years ago. So it's phenomenal being able to have that type of ability. But anyway, so last night as we were right here, I was sitting in a grocery store parking lot basically, and I knew in my head it was such an important support. Obviously in European trade they try to push it a little lower, but we created a hammer, and right now the risk is that we bounce in the euro. Okay, whenever I see a hammer formation or an inverted hammer or shooting star, whatever, there's a high probability that we're going to get a reversal. Does that mean we're guaranteed it? No, but I think a realistic expectation at this point is a bounce back to the breakdown point. And I'll tell you guys, if we get a move back to 1330, I am a seller. And I will add back everything that I closed out last night. Okay? So that 1330 level is going to be key for resistance. Okay? Now support, the spike lows I could write down as support, which probably is a good thing to do, because if anybody who's getting long this morning in Europe, European trade, I say in Europe, you guys could be in anywhere, doesn't really matter, but anybody who's getting long in European trade right now is thinking the exact same thing. I'm going to get long, I'm putting my stops below the lows. So, if we break through those lows, we're toast. you know, I want to think that. So now I got to figure out why we stopped here. And realistically, it's probably because we're at a 38% retracement of this. Now we're damn close. Damn close. Um, so support for today, if we break through the lows, which comes in at 112.33, next support's going to be at 112. So I'm going to write down this 112, 112.33. Okay? We are in a range. It's frustrating for me to write that, but we are, you know, whether you like it or not. We're in a freaking range. Annoying as all get out, too. All right. So 618 holding, trying to create some sort of hammer here, trying to get a lift, any lift up to, 1330, looking for shorts. Pound. Now, and by the way, just thinking along those lines, I'm sure the market's expecting a weaker CPI print. I mean, it seems like inflation is coming through through wages, but then again, we're seeing, energy costs are stabilizing, so maybe CPI is not as benign as we think, but I'm sure after yesterday's print, people are going, All right, so here's the cable. What do we do with that? I have no idea. I mean, it's okay to say that, right? It's okay to say, man, I don't even know what to do with the cable because frankly, I don't. I don't. So what do you do with it? Well, if you don't know what to do with it, you do nothing with it, right? Because 1450 is still support. I know we spiked. I'm sorry. So 114. I mean 140.50 is still support. I know we spiked to 140 here, and that we can mark fibs from there, but in all actuality, this 140.50 is going to be really, really key support. Now, resistance, if you missed this yesterday, this is a wedge. Shot that out to the guys and gals in the chat room. We had a bearish wedge in the cable. Okay. That breakdown was pretty easy to read, and it all happened in Asia. It happened right after the New York close. So I'm talking in the dead zone. It just broke down, right? And that actually, I think, really kicked off a lot of the dollar strength, frankly. But that happened like right after the close. I mean, maybe an hour or two after the close. We were like right here, and then early Asia, like in New Zealand trade, that's when that happened. Anyway, so any move back up to 142, you're going to find sellers because now that's the breakdown point. And, people are going, okay, if we can just get back up there, I'll be happy to get out of my longs. That's what anybody who's long is probably thinking at this point. So 142 and 140.50, and I think unless you're going to try to fade one of those two areas, you just leave it alone. All right, because here we are, we traded. Yeah, like 141.50. So, selling it like that, or buying it like that, if you're ballsy enough to do so, I think that's how you have to trade it. I don't see any reason to be doing anything right at the moment. Ziggy said, laugh out loud, I can see you in the grocery store parking lot using your cell phone. Meanwhile, other customers walk by wondering that you're doing something deviant. It's probably really true. There's this, I look over and I was sitting in my SUV, right? And I look over and there's this my wife's asleep right now, so I could say this. There's this really, really pretty, beautiful brunette woman in this like, you know, brand new souped up Audi, SUV next to me. She had like this nice, Q8 Audi SUV thing. She was sitting next to me, and of course I got my we're about level to each other, and I'm trying to trade, and I got my phone in my lap, right? I got my phone in my lap. I'm looking down, and as I'm wiggling around my fingers and my hands, who knows what the it looked like. And I remember I look over because through your peripheral vision, you can feel somebody's like looking at you. And so this lady's, I, I'm sitting there, I'm sitting there, you know, trying to trade, trying to get out of the euro, and I was having kind of internet connectivity issues, in the parking lot. It's like I don't know why. It was like I wasn't getting the LTE coverage. I was getting like a crappier coverage, and I'm kind of shaking my phone a little bit. Then I'm moving my hands around. So who knows what I look like? And I look over and I look at this really pretty brunette woman, and she's just looking at me like, "What are you doing?" Anyway, okay. Yeah, that pretty much summed up my evening last night. Okay, so blue balls once again. All right, there's the cable. What am I? Okay, what am I doing? All right, so there's the cable. Let's go over the Swissy. So the Swissy yesterday, 96.60 was resistance, right? We were just inching our way up above there, just trying to climb above it. And oops, I didn't mean to do that. I meant to move the whole chart over, but as you can see, it's 96.60, really, really critical resistance still. All right. Now, this is the only, by the way, just so you know, this is the only currency pair I did not take profits on. Just so you guys know. All right. I did not take any profits on the dollar Swiss. All right. 3 months ago, when you guys asked me, hey Blake, are you gonna buy the dollar Swiss here? No, I'm not gonna buy the dollar Swiss here. Where are you gonna buy it? I'm gonna probably buy it by the time we get there. I'm gonna probably buy it around 90, 96, 95.50. All right, Blake. Hey, you gonna buy the Swissy again? No, I'm gonna buy it at 99.50. All right, Blake. Hey, are you gonna buy the Swissy here? No, I still think I think we're gonna come back down towards and retest this trend line down at 95.50. Okay, Blake. We're getting close to 95.50. We're at 97. Are you gonna buy it yet? No, I'm waiting for 95.50. All right, we finally get to 95.50. I get long 3 months later, and now you're asking me, am I going to sell it? After sitting through all of this pain for the last 2 weeks, do you think I'm really going to sell it now? No. No, I'm not. I'm building a long position because I'm targeting above parity at this point. So I'm not selling. I'm not. I can sell all the other crap. I don't care. But the Swissy, now. Why do I believe in this trade? The reason why I believe in this trade is because the Swiss National Bank is doing everything they possibly can to continue to make sure that rates stay abnormally low. And I know some of you freak out because you're like, well, how about what if the Swiss National Bank does something crazy again? If they're going to do anything crazy, they're going to reinitiate a floor. They have no floor to remove. So this move that you see here cannot happen again. Well, I mean, it theoretically could, but I mean, anything can happen in the market. But it's the likelihood of this happening again is highly unlikely. Okay, that's because they were maintaining a floor and then they couldn't hold it anymore. It cost the private central bank too much money. All right. If anything, they could reestablish a floor and say, all right, we've recouped a lot of our losses. We're ready to, put the floor back at 120 on the 120 on the Euro Swiss, or maybe 115. And next thing you know, the dollar Swiss and everything else goes rallying, 500 pips. Um, they don't have any floor to remove. They can continue to drive rates even into more negative territory if they want, which is only going to help the dollar Swiss go higher. Okay, when you have a central bank that is hell bent on keeping rates low, not only low but in a negative territory deep as much as they can, it's saying, hey, put your money with me. Go ahead, park your money at the Swiss National Bank. I'm going to charge the crap out of you for doing that. I'm going to make it so unattractive that you're not going to want Swiss francs anymore. That's what they're saying, because they're not paying you. It's not like, you're parking your money at Bank of America or, Piraeus Bank or some other bank. It's not like you're parking money over there and they go, okay, we're going to give you a percent of interest. No, they're going to charge you a percent of interest almost. Then they could keep driving that down too. No, park your money here. I'll charge you 2% in interest. Why wouldn't they? They could, right? So if anything, I want to be a seller of Swiss francs as it rallies. And so it's rallied, and I want to. Now, I do agree that if there is some sort of European contagion, especially with a Brexit or something like that, the Swiss franc will be bought. Temporarily will be bought for safety reasons, because institutions will say, I don't care if I have to pay 2%, or right at this point in time, I don't care if I have to pay 3.5% or 0.75%. Who cares? As long as I know my money is safe. Yes, that will always be an issue. Okay, there will be a rush to safety if there's a need to be, but it only will be temporarily, because institutional traders can, they can't hold on to that position in a interest-driven world where it's getting increasingly popular, or increasingly hard, to find interest anywhere. The last thing they want to do is get that small amount of interest taken away from them for an extended period of time, right? So anyway, I'm looking to build a long position here, and this is the only thing I did not pull profits from last night. I pulled profits in the Swedish krona, the euro, the Aussie, the Kiwi, the Canadian. I took the Norwegian krona off the table. I took a lot of profits, not in the Swissy though. All right. So I know I sounded a little crazy 3 months ago when I said I'm going to buy it at 96 cents. I'm going to buy it at 95.50. That I sounded a little crazy, but now that we're here, I'm working my plan. So you guys understand what I'm doing. I'm working my plan. Don't get off my back. I'm just kidding. No one's really on my back. I'm just saying that. All right. So where can we go from here, though? If we get dips, where's a good dip? I mean, hey, if we can get a dip in the dollar Swiss, where do you establish some longs if you don't own any? Look, a 50% retracement is at this breakout point at 96 cents. Wow, what a great place that would be, right? Right there. So 95.95, 95.95. If you can get it, fantastic. Okay. We really have, on a dip, what we'll do is if we dip like this and then we bounce, we're going to end up not making lower lows. We're going to make higher lows. Okay, so that's good. We really need to make higher highs, which we haven't done yet, which means that this 98 cents is going to be a big deal. But let's figure out. I mean, that's the 618 right there. So I'm going to write down that, resistance at this point is at 96.80, and I know that's the highs, but it is. I mean, because if we break 96.80, then that kind of unlocks some higher prices, because that means that it's more of a relentless bid than anything. Okay, so range. Damn, I spent a lot of time talking about a lot of nothing. Okay, let's go over to the yen. Here's the yen. So we have a double bottom, double bottom, neckline. We're holding the neckline. Okay, which means that our target is 110.50. 127% extension is holding. I think any dips down to 108.80 are going to be bought. So 108.80 resistance right now is 109.50, and above 109.50 we target 110. So 109.50, 110. Whoops, 110 is the 161% extension, and we are in a bearish trend. We're just seeing a counter trend move. So we're in a bearish trend. We're in a bearish trend. We're seeing a counter trend move right now, back up to 110.50. And if we can get up to 110.50, I am a seller. Just so you know, if we can get back up here, I do want to be on the short side of the dollar yen. I think we have unfinished business still at 105. Unfinished business down here. All right. All right. What am I at? Yen, Swissy. Oh shoot, that's why. 95, 96, 80. I put it in the wrong spot, like a dummy. Like a big dummy. All right, let's go over the Canadian really quick while we're here. So here's the Canadian, and really, really great rejection off of this butterfly. Remember, we have a 38% retracement on a monthly basis, 127% extension on a intraday basis, and we really bounced right where we should have. Now we have rallied back, and it's a little messy at this point. So let's delete that. Let's remove that. So we had a rejection at 129. I'm going to tell you right now, 129 is resistance. Any which way you slice it, I don't care how you slice it. That is key resistance. The question is, how far are we going to dip? And we are at a 38% retracement right now, right? Oh, 50% retracement right now. 618 at 128. So 129, 128. If you can be a buyer at 128, I think this is the place where you want to be long today. And if you want to take profits, you take profits up here at 129. Okay, so it's pretty easy. 128, 129. 128, remember, is 618, so I think that's going to be a round number. Also, 618, I think it's going to be a significant place to play on the long side. Okay, I'll be back in a few minutes. Don't go anywhere. Thanks, everybody, for being here. Happy Thursday. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. All right, we got to finish up with the Aussie and the Kiwi, and obviously the dollar index and all that fun stuff. So let's go over to the New Zealand dollar. The New Zealand dollar really got hammered last night, and a lot of that had to do with the move in the well, there was the move in the dollar. B, the move in the Aussie New Zealand really put the screws down on the Kiwi last night. Now the Kiwi has recovered a little bit, and I did pull some Kiwi profits last night because I knew the 618 was coming up close. But notice that we I want to point out something that is maybe not so obvious to you, but I want to make sure it becomes apparent. This upward sloping channel. This upward sloping channel is hold on. This upward sloping channel, we made a lower high. Okay, so that's concerning if you're a Kiwi bull. Obviously, you look at the multiple failures here above 69 cents is also pretty concerning. So that automatically, because we're making a lower high now, that puts the downside back into play, and it really puts this channel low into play. So what should you do here? Well, I think here you have to look at, here, let me remove that, and I think I can keep everything else. This low is going to be important today because that's the overnight low, so we need to mark that automatically. But what I'm thinking here is if you can get any rally now back above 69 cents, that's probably going to be a place to be on the short side to target this channel low and back at these lows. Okay, so um, here, and I don't know where we're going to stop, but if you go over to an hourly, it might be something like this. So let me redraw this. You think about where we're at right now. That's going to be a move back up to 69 cents, or maybe even whatever the low is here, 68.98. Yes, it's 69 cents. 69 cents is going to be a place that you probably want to be on the short side if you can get it today. All right, we're in a range. I know it's a grinding higher channel that we've been in, but if you look at longer term, it's like a range. Okay, we're just probing the top upper end of it. Okay, now support is going to be the overnight low, because if that low is taken out, then that automatically puts these lows back in place. So that low comes in at 68.22. So I'm going to write down 68.20. Okay. All right. Aussie. Okay, so here's the Aussie dollar. Aussie, right up against resistance. Obviously, this is very critical resistance for a lot of different reasons. It's if you go out to the daily chart, weekly chart. So there's the big 618, right? That we're finding ourselves on both sides of by about 50, 80 pips on both sides of it. So here we are just knocking our head right up against resistance once again. 161%. Did I just? Oh no, that was in the Kiwi. Probably have a very similar, but 77.20 is just, it's critical any which way you slice it. All right, 0.7720, critical resistance. Hold on really quick, okay? Just bear with me. Okay. All right, I had to do something. So there's resistance, 77.20, support. I mean, we have to write down 76.20, right? Yeah, we do. So 77.20, 76.20. I still have a short Aussie dollar. So, my cost average is 76.75 right now. I'm down 31 pips in it. I'm sitting in it. It's not a big position. It's actually quite small because it was a half-size position to start off with, and I closed out part of it. So, I don't mind being in the position right now at the size that I'm in, but and by the way, I closed it out last night at like 76.40 something, right after the Aussie jobs report, because I kept it short. I kept my short Aussie as a hedge because I'm long the Aussie New Zealand. So when the number was good and we bounced around a little bit, I just closed out, half of my half position. So it was like, I'm only in a quarter size now, really. So 76.20. Range. Dollar index. So the dollar index has a this has a 4-hour kind of a shooting star type of long wick we left. But what's interesting is we haven't seen any downside follow through yet, and that that really builds my argument that this descending wedge is, something to be reckoned with. Now, you guys know the technical reasons why, I've been looking to be on the long side. We had a descending wedge, what I think is a descending wedge. We are at the lower end of our range, right? We're at the lower end of our range. And then, dollar longs are at their lowest levels that we've seen since April of 2014. Okay? So that means there hasn't been we have less longs right now in the dollar than right here. There are less people long the dollar right now than there were down here via the commitment of traders report. Think about that. There are very, very few dollar longs here, and as we ramp up, people finally start figuring it out, even though, all of us here at Wise Trade, remember us on the morning edge, we were all long the dollar, balls long right here at 82. They started building long positions through this rally, then they got mega long up here, obviously got killed. They're still mega long, they get another rally, they get mega, mega, mega long, and they get crushed, and now you got dollars at the lowest levels of longs that we've seen since down there. So to be short the dollar right now, dangerous. Dangerous. You got so much support down here, and there's very few longs. That's a recipe for a move right back up into the range. It's actually a recipe to move to new highs, actually, at this stage in the game. And if you think about it, I want you to think about this real quick. Here's the dollar right now, right? There's not a lot of dollar longs on the boat. Not a lot of dollar longs on the boat. We had a big tidal wave, rough waters come through, knocked everybody off the side. Man overboard. Yeah, screw them. Let them. They fell off the ship. So there's a few of us standing right now. Everybody wants to back on the ship. And what if, let's just think out loud here, what if the Fed, instead of raising rates in December, when the market's quote unquote thinking they're going to raise rates, how about if the Fed raises rates at the end of this month, which probably won't happen? How about they raise in June? Think about that. That's going to put us up here, because now you have not so many longs. You have the Fed actually raising rates, and then we'll see a breakout. I'm just thinking out loud here. That's it. All right. That doesn't have anything to do with right now, does it? It doesn't. It's a 3-hour chart. Okay. Anyway. Dips in the dollar. I don't think dollar dips are going to be too deep. 94.75 will be support. Resistance, overnight high, because if we take those out, we're going 95.20. We're in range. By the way, I need to switch back the Aussie. The Aussie's still bullish. It's been bullish. I don't know. I've slipped in range, but it's still bullish. Okay. I know we're at the upper end of our range. I'm aware of that, but we still have to mark it as bullish. Okay, the problem with the peso right now, and the reason why the peso can't get out of its own way, is because the damn stock market's so strong. But this 618 is holding 1760, 1742. 1760 is like that previous support right there, right? 1760, 1742. I'm just going to write that down for those of you that are trading. And crappy thing is I'm long the peso at 1763. So it sucks for me. I'm out of the money right now. I'm, kind of pissed off that I have such a bad cost average, but whatever. That's okay. I am underwater right now in the peso. Let's go over to and the only reason why we're breaking above the 1760 level is because the market's probably feeling a little risk aversion, but right now the market's so damn strong, it's ridiculous. Ridiculous. Okay, here's the Norwegian krona. I sold mine yesterday on the spike up here. We were spiking, and I'm like, yeah, I'll just take that, you know. Oh, that's interesting. I mean, it's not as interesting as I thought it'd be. Okay, never mind. I don't. Let's delete that. I don't want that. Um, this is not easy to read. It's not. It's just not easy to read. Uh, I think we're gonna probably end up being more influenced by crude here, but it's just not easy to read here. I don't. I'm gonna just. I'll mark up 830, and then obviously this is great support down here. Is channel support. So really great reaction down here. So that's 812. 8.12, 8.30, and no, we're in a range. Sorry. I say that because we're grinding lower right now, but I mean look at the longer term charts in the U.S. dollar Norwegian krona. It's hard to be too bearish this right now. As much as we've been driving lower in this range, I just we're finding some support down here. I know we have a head and shoulder pattern, still points us a little lower, but Swedish krona, I am still long. My cost average right now is 8.0774. I kind of want to keep this forever. Not forever, but I mean, I kind of want to. I sold a little bit last night. This is one of the ones I sold a little bit less of. But look, we hit. I mean, look at that resistance. I kind of want to hold this till we get back to 860. I really don't want to sell what I've got. I really don't. Um, I think I got such a great price. I mean, I own it right here. I own it right here. I don't. I don't think we're going to see that again because of that hammer. But eight. What is it? 8.19. That's key resistance because if that breaks, it's gone. If that breaks, it's history. Seriously, if this goes, forget about it. We're going a lot higher. Okay, if that breaks. Um, yeah, I mean support back to 810 would be probably really nice for longs if you want to get long right through here. I'm just gonna roughly draw that. something like that. So roughly 810. Okay. We're at the lower end of our range. There you go, guys and gals. Your bias chart is done. Man, I took a long time doing that. I think it's because I spent half of the morning yawning. The other half of the morning, I talked about the Swissy. It took me so long to do that. Wow. Well, it's done. I hope you again. I've been